Thank you for attending Premier's Life Weekly this Monday, August 17th. My name is Mark Landholm. I'm a national marketer here at Premier Life and Annuities. Today, we are going to be talking with LSW, a division of National Life Group, and with September being Life Insurance Awareness Month, we're using August to promote underwriting and some of the effects that has on life insurance and preparing you for selling life insurance. Today we have Gary Lenz. He is Senior Internal Sales Associate for National Life Group and Life of the Southwest. Gary is going to be talking about, and we're going to be discussing LSW's position. Going to start out with their underwriting strengths and then move into what's happening with them and a lot of other companies into the changes on the illustrations for the Index Universal Life. It's happening on September 1st for all companies that are in Index Universal Life. So underwriting strengths and points of strength for LSW will have a huge effect coming already here in a couple of weeks, 2 weeks, starting in September. So, Gary, why don't we kick it off? Welcome aboard.
All right, thank you, Mark. Good morning, everybody. As Mark said, my name is Gary Lenz, and I am a Senior Internal Sales Associate here at the National Life Group. And I was formerly an agent, so I have a good perspective on where you listeners are in terms of selling to your clients and presenting in front of clients and consumers and clients and prospects that don't necessarily understand life insurance. So with the upcoming Life Insurance Awareness Month, I recall when I was an agent and that month would come along, we would do everything you can to get those prospects that haven't done anything or say they need life insurance. You get them moving. You try to do something to get them going in terms of protecting their families. We do that as agents in many different ways, different focuses on either the product, the pure death benefit protection, the cash value accumulation, whatever your approach is. The things we're going to talk about today matter, and they can be used to your advantage in your selling and your prospecting. So I've got three things. With that all said, I've got three things I want to cover. First, I want to cover our Simplified Underwriting program that we have here at National Life Group. The second thing I want to cover is our special underwriting program. Actually, it's a pair of programs. There's a partner program. One is called Term Out, and one is called Jump In. And then I'm going to close with the illustration topic, as that's not quite as attractive to getting new business, but there's some impacts that you definitely need to be aware of if you're selling any carrier's IUL products. So hopefully that sounds all right. So let me just get started with the simplified underwriting. Why is simplified underwriting important? Well, in your world and in my world, speed of issue, speed of getting paid, more importantly. You want to get paid fast. You want to be able to take advantage of, you've got a relatively healthy person, you want to get that process done fast rather than waiting for medical records and medical testing and all the rest of that just delays an application. Let's get it issued fast. Let's get it paid fast. Let's get the coverage in place fast for the clients and get their families protected. So there's a couple of things only that you need to know about this program, our Simplified Underwriting program. And Mark, by the way, has some materials that he'll follow up. Anybody that wants them, Mark can send them materials supporting all three of the topics we're talking about today. But with our Simplified Underwriting, there's 4 different products that you can utilize. There is a product that we call the Secure Plus Provider. It's an IUL product. There is our term insurance. Our term insurance for all different durations falls under the Simplified program. Our Foundation Fixed Universal Life falls under this program, as well as we have a whole life product called Protect Your Life. So no matter what the type of insurance your client's needs dictate, we have a product choice for them. What other life insurance products types are out there, really, that your client would need? If there are other products, it's usually a variation of the 4 types I just mentioned, IUL, term, UL, and whole life. So now that you know the products, there's two key points you need to know, and that is basically limits. Limits as far as how much insurance and how old the people can be. The first one is the death benefit limit, $250,000. That's the maximum death benefit. That's a pretty generous death benefit. If you're working kitchen table sales, you're working with younger, generally healthier people. The other cutoff is all the way up to age 65. So 250,000 and under, age 65 and under. Any of these four products works in our Simplified Underwriting program. We do reserve the right to underwrite, but that's actually okay because that's where there's an advantage. There's a specific rate class available for these four products. I mentioned a moment ago that this program works well for generally healthier people. But when you have people that are mildly impaired, maybe, well, I'll use myself as an example. I have diabetes, type 2 diabetes, so I'm what would be considered a mild impairment. These products, these four products I mentioned before, offer an express non-tobacco rate class. It's not specific to this program, so if you have somebody that's healthier, they'll just get a standard rate class. But the nice thing about the express non-tobacco rate class, in most cases, it still allows all of our accelerated benefit riders. A few weeks ago, I did a presentation for Mark on our accelerated benefit riders for terminal, chronic, critical injury, and the newest critical injury. Well, these products are not stripped down because they're in the Simplified Underwriting program. There are regular products that you would sell anyway, and we may actually have to underwrite. So from that standpoint, why wouldn't you use these programs? Why wouldn't you use these products? 4 to 7 days issued. Actually, I've seen it even quicker for very young people. But if you've got somebody that's 50 years old in generally good health, we review the medical questions answered on the app, and it's all done. Boom. Policy's issued. You get paid. Fast. Why not boost your life sales, specifically life sales, during Life Insurance Awareness Month? Well, with all the description of the Simplified Underwriting program, Mark is taking questions through the chat feature because I think he has a WebEx going as well. So if you have any questions further, you could type them in the chat, and Mark can relay them verbally, and we'll get them answered. But if there's none right yet, Mark, I'm going to move on to the next topic, our term out and jump in.
Go right ahead, Gary. We're going straight ahead.
All right. So term out, jump in. What does that mean? Well, think of the name, the name of the two programs. Term out, jump in. How many times have you been prospecting via phone or even in person, and you meet or talk to that person, they say, I'm all set, I just bought insurance from XYZ company, right? The old I'm all set. Well, they're all set with something they don't even know what you were going to talk to them about or present to them or suggest or anything, but they're all set, right? Not the way it works. I'm sure plenty of you got that. I know I did when I was early in my career getting a lot of prospecting done. I'm all set. I'm all set. But if you can get in front of your clients, here's why this program can be beneficial to you. Term out. What is that? Well, like the name suggests, we know that a lot of term insurance from many different carriers is convertible to something permanent. Now, that might be true, but there's fewer carriers that actually allow the conversion to any or all of our single life products, for example. Some of the companies have watered down, really not very well performing products that you can convert to. Some specifically say, oh, you have to convert to this whole life or this UL. They're just not very attractive benefits when you talk about conversion. So when you think about it, having the ability to maybe convert somebody's existing term to one of our permanent products, you gain a couple of things. You might gain a better policy, better product for the client, but you'll also gain the access to the accelerated benefit riders. It's a great program. I think it's so underutilized here because agents just don't find out about it, but they should know about it, and that's why we're talking about it. Again, Life Insurance Awareness Month, next month, why not make them aware? Are you getting the full benefit from your term insurance that you bought from XYZ company? Probably not. So why not talk about Life of the Southwest permanent product, where you can get a good product with cash value accumulation as well as accelerated benefit riders. Now, there's a couple of key things you need to understand, okay, and that is the parameters with which we'll take over their, basically underwrite and convert their term. One, maximum age is 65. So if they're beyond 65, we won't allow it. The other is they have to have been fully underwritten by that other carrier within the last 5 years, okay? So that also dictates a minimum and a maximum face amounts. Minimum face amount is 101,000, maximum is 1 million. You might think, well, why do you have that minimum face amount? Well, there are plenty of carriers, like we're doing now with Simplified Underwriting, that have Simplified Underwriting rules that cap at 100,000. Ours is 250, we just spoke about a minute ago. So we want to know carriers that fully underwrote that term policy. And we will allow conversion to our products. Does that make sense to you? Does that seem simple enough? Now, I say other carriers, and I know you're waiting. You're probably asking that question, well, who's on that list? Well, last count, there was, I think, 92 different carriers on that list, and there's a few that I've never heard of, but most of the big name companies, AIG, Allstate, American General, Americo, Aviva, don't even know if they go by that name anymore, Genworth, Guardian term, Hartford's term, New York Life, MetLife, Prudential's Life, all of those big name household insurance names, as well as some others that I've never heard of, but you might have. They're all eligible. That's a big universe. That's about 10+% of the insurance carriers out there that we allow conversion to our products. So remember, let me reiterate the factors that you need. Their term has to have been issued within the last 5 years, has to have been fully underwritten. Maximum age is 65. Minimum face amount of 101, maximum face amount of 1 million. It's a great benefit, speedy issue, speed to get you paid. The second program is called Jump In. Now it's similar, it's related, but it's a little different. So the term out, remember, was conversion of an existing term to a new permanent plan, not term, permanent. The Jump In program allows for clients that have either bought a term policy from the other carrier or a permanent policy from another carrier, and they want to do the similar thing that term out does. They want to maybe buy a new policy from us, but one of the differences is we don't require them to get rid of the other carrier's policy. So maybe they bought an IUL at another carrier but doesn't want to get rid of it, they just want more insurance. We end up relying on that other carrier's underwriting. We rely, and here's where the facts come in, so take a note to jot this down. Mark has got a PDF he can send you. But who is eligible? Well, anybody who bought a term or permanent plan in the last 3 years. Okay, 3 years. And we'll stretch that 3 years out to 5 years if they had a physical within the last 2 years, a full physical by their doctor within the last 2 years. Not just a checkup or the cough or the sniffles, but a full physical. So it could be as long as a 5-year window. The other parameters are similar, okay? 65 or older, 101 is the minimum, 65 or younger. 101 is the minimum face amount, and then the lesser of the face amount up to $1 million. So we won't offer more than $1 million, but we won't offer as much if their existing policy is not as much as $1 million. So we're trying to match the face amounts. One other fact that you should know is on both of these programs, they're not guaranteed issue. Okay, we don't want to take on new risk where maybe the person was standard and now they're terminal because they've got cancer. That's not gonna work. You're not gonna be able to shift the risk over to us and then have the availability of the terminal illness rider, something like that. That won't work. They have to be standard or better at those other carriers, and then we'll match the race class as best as we can. We won't do substandard, and of course, standard or better, they could be smokers as well. We would allow a standard smoker or a preferred smoker in these programs. A similar list.
Yeah,
Mark,
Gary, Gary, is this available for what products? Is it all products or
it's all products, actually. Not just the four I mentioned in the simplified underwriting, but all products. All single life products that we would offer, okay? Now, the company list, it's the same list with the addition of 10 other companies. There are 10 companies where we only have availability in the jump-in program, and it has to do with the mechanics of either canceling that other policy or doing a slight underwriting review without asking for medical. Again, I'm not going to list off those companies. Mark's got the list. There's too many. I'd be an hour just reading them all probably. But it's another great program that we have that you can increase your business and do that on a quicker basis than full underwriting. Between the term out, where you've got a company, a person that has another company's term policy, or jump in where maybe they just bought another policy that they bought another carrier, and then you've stumbled upon them somehow as an agent, and you see that we have some better benefits with our accelerated benefit riders. Two great programs to push additional business through this month and into next, and every month after that, of course. But
that's a great product for like fixed rate ULs, where maybe the client and the agent weren't aware of the index universal life and all the ABRs, you know, the accelerated benefit riders that we have, to add another batch or layer, which is exactly a great way to increase insurance and keep that client active on an ongoing basis. Good point, Gary.
Yeah, and you know, another potential for sales, Mark, in a program like this is maybe you as an agent sold them another carrier's term policy, mainly because of the cost. You didn't sell them our term, or you didn't know about our term product and our accelerated benefit riders, but maybe you sold them another carrier's term within the last 3 years, and now they're interested and can afford an IUL product. So, but they don't want to give up that other term because they want additional coverage. That's where Jump In works well. We'll utilize that other carrier's underwriting if they're approved on our list, and we'll issue a new policy with, say, one of our IUL products. Really simple, easy to get business in place fast.
Yeah, and that just leads us to what we preach and what we were talking about prior. You know, I think even before we started the webinar, Gary and I were talking about, you know, the key to making all of this go is those annual reviews, watching, reviewing. There's no reason not to do it, even if you sold the cheap term. That's a key benefit, because life does change, things happen, people have kids, things happen in 2-3 years. Here's a perfect opportunity that you've sold a policy in the last 3 years, and we've got an opportunity to do it very painlessly, but also get to the great products that ILSW has, like Flex Life and those that are out there.
Right. Mark, any questions in the chat yet?
No, we're doing good. We've got it going. So move on to that third topic.
All right, let me talk about the third topic. Now that we've finished with term out and jump in, let me talk about what's coming in as far as a regulatory mandate with respect to illustrated rates for IULs. And it is regulatory imposed. It's not us. It's not some other carrier that you're talking with. It is regulatory imposed. There's changes afoot in maximum illustratable rates with respect to IULs. So the industry, the NAIC regulators, National Association of Insurance Commissioners, have determined a standardized methodology for calculating what illustration rate you can use, the maximum you can use. A lot of agents we have been encouraging to be conservative, so a lot of agents already do this anyway. But now it's coming directly from the regulators. We have to reduce our rates. And you know, when we've seen this, anybody who's been in this business for a long time has seen this happen before. Time and time again, the industry goes through changes for whatever reasons, and there's new regulations that get adopted. I've been in this business 14 years, and I've seen it. I've actually owned insurance a lot longer than that, so I've seen it from that respect longer. But Mark, I know you've been in the business a while. You've seen changes occur. I don't feel that this is a death knell to the IULs at all. It's my opinion. I really don't think it is. The products themselves, our products are not changing. In fact, I don't know if other carriers are changing theirs or not to compensate, but we're not. We don't need to. Why don't we need to? Because it's just a hypothetical example on an illustration. That's all it is. It's not real. It's not what's exactly going to happen. We all know that illustrations are hypothetical. That's all that's being impacted. In fact, I sent Mark our newest guide to indexing, and it's a consumer piece that you can use with those clients to try to help them understand indexing. And you can show them, look, the industry says I can illustrate this as the maximum rate, but look at what Life of the Southwest and National Life Group has actually credited over the past 6 years for this product. Why don't they match? Because the regulators want the companies to be conservative. So you can get credited much higher than we actually illustrate. What are the time frames for this? Okay, the time frames are September 1st. It's coming up. It's only 2 weeks and a day away. And our illustration software will be impacted and all your sales going forward. You might want to start today using the lower rates. I'm going to quote them. I don't know how familiar you are with our products and our current illustratable rates. But for example, with our Flex Life product, you could illustrate today as high as 8.1, and that's going down to 7.07. We've been talking for months to agents to illustrate 7 for a long time, and it's right about in where the regulators are coming at 707. That's the fact. You're not going to be able to illustrate any higher than that, but why not? So what? Under promise and over deliver. We've all heard that, right? The other product, which I mentioned that fits in our Simplified Underwriting program, is the Provider IUL. Currently, I think that's like a 6.6 maximum interest rate, and that's dropping down to I'll call it 5.7. It's a little bit higher than that, but 5.7. Again, it's a hypothetical. I've been encouraging people that use Provider because it's a simplified product to quote about 5%, 5.5% in that range. So see, we're right down in that range where the regulations are moving anyway. Every carrier will have to impose their own limits. I've not seen data from other companies yet. I'm sure our competition guy is putting together materials as we speak about this. There is a second part to this regulation that's coming. Mark, you didn't mention it on your intro, so I'll mention it here, and that is in March of next year. Right now, if you're familiar with running an illustration where you put premiums in, you accumulate cash, and then you take money out via loan mechanisms, right now there's this spread between what you can illustrate for interest rates and what you can use for the current loan rate. Our current spread, for example, is approximately 4%. It's a little bit lower than that. So you can illustrate a client getting credited 4% more than he's paying on the loaned out money every year. That's a big spread. Well, the industry is saying that's coming down. And although I haven't been told officially, I've heard unofficially it's coming to a maximum spread of only 1%. So what does that mean? Is that what the spread's going to be? No. We don't know what the actual spread's going to be because it's a hypothetical, but that's the maximum you'll illustrate. So you can see that the commonality of these two changes, the theme of the regulators is to be more conservative. That's what they're trying to do. They're trying to be more conservative with illustrations. And there's nothing wrong with that because it's protecting the clients. And if your clients won't buy solely because of the numbers, then maybe they don't totally understand what they're buying. They need to understand that it's life insurance that has a death benefit that helps protect you if you unexpectedly pass away soon. It has living benefits, our accelerated benefit riders for terminal, chronic, critical illness, and critical injury. And it's got cash values that accumulate for things like emergencies and maybe supplemental income, maybe for the future. It's not a one product only type of product or one solution only type of product. It covers multiple solutions at different stages in your client's life. So I don't see anything wrong with this new regulations that are coming. Mark, anything you want to add to that?
Well, I guess just to reiterate, the interest rates are going to be illustrated, doesn't change the product, so consequently that has no effect on the caps and the minimum interest rates that can be shown. Is that correct?
That's correct.
So the cap rate of the S&P 500, whatever interest rate you have, is going to remain the same. So that can be up to that if the markets and if you've done well to manage your money, and the minimum, the 0%, never going below that floor is not going to check. So it's just like you said, the theoretical illustration that's being ran at the time of sale. And once the policy has been issued, then you're running actuals. What has actually occurred and where that policy is really at when you update it every year. Correct, Gary?
That is correct.
Okay, and then the loan rate, the differential, doesn't take effect till March of next year, and that also doesn't lock it into a set only 1%. We'll take what we can get, but we know with current low interest rates, we can maximize that difference when you have a strong company like National Life Group and LSW. Is that safe to say?
It is, and it's interesting if you start thinking about loan rates and illustrated rates, because they're all hypothetical. We're at a historically long, protracted low interest rate period. When the client goes to take money out in the future, the rates might be that low, they might not be. We don't know. Next year when this new regulation comes into effect, if caps and illustrated rates were to stay the same, but loan rates would go up, that might negate the whole purpose of the regulation anyway, but we don't know. And that's one thing about illustrations. We just don't know what will actually happen.
And you're not locked into those rates at the time of sale. We're talking
Absolutely.
about theoretical, what's going on in the future. So, and this is occurring with every company. So what it brings out is strength of the company, go with the strong company, which check, National Life Group is. The other check is accelerated living benefits. No other company's got the 4. With that added chronic injury rider, which no one else has in the industry, is absolutely a fantastic benefit and underwriting, great benefit for you to sell and talk to clients, because it's, in my opinion, designed for that younger crowd that this is a life happening, a life occurrence that they're well aware of and have got on their mind, where maybe death isn't, accumulating cash and some car accident or something like that happening. That's a real possibility, and this is a life insurance policy can address those needs, address those concerns, and create that sale.
Yep. Well, any questions in the chat, Mark?
No, there are not any right now, so let's just kind of wrap that up. I mean, we talked about the simplified issue, 4 basic products. We have the term out, which is available with 90 companies that have term insurance that have wrote. And then we have the jump in that is term and permanent that allows you to write additional insurance, or we're not necessarily looking to replace, but it writes additional insurance for these clients that have taken other companies in the last 3 years, and keeps that simplified issue or quick underwriting available for a very strong company. And then last, we talked about the illustration rates and what's happening on the illustration in the Index Universal Life. LSW is strong. Everybody's going to be in that 7% range. They're basically just urging us to illustrate more conservatively and then have a maximum differential of 1%. So it's really going to show up on the cost of insurance and the strong companies that will it still illustrate well and also give those clients the benefits they need. Anything else, Gary?
No, I think we covered it all, both, Mark.
Thank you very much. I want to thank everyone for attending. we will be able to send out those handouts, and we'll have another Life Weekly next Monday here on Premier Life and Annuities. And if you have any questions, call us at 800-365-8208 and talk to one of your life marketers, either team that you would have. Again, that's 800-365-8208.